Hi folks, Rick Wedell here. I'm the Chief Investment Officer at RFG Advisory. Thought we'd come to you today with a brief market update, kind of let you know what's going on out there. S&P 500 right at about 58.23. That is up about 23% year to date. We're having a nice day in the market today after a little bit of a down week last week. And we're just going to kind of jump right into the headlines and let you know what's going on. It's earnings season, which is probably the biggest headline that's out there. We've had about 180 companies within the S&P 500 report so far. So far, earnings have come up about 3.5%, and revenues have risen about 4%, which is right in line with the sort of street expectation of 4% earnings growth and 4% revenue growth. So companies coming in, basically the overall earnings picture coming in right in line with where people thought it would. I would note we have right at about 80% of companies, quote unquote, beating earnings versus their original guidance, which is right in line with the 4-quarter average. So the previous 4 quarters, we've had about 80% of companies beat their earnings estimates, which I think actually speaks to the skill of CFOs at their guidance, providing guidance that they can kind of jump over pretty easily, appears to be the trend, but in any event. We have about another 200 companies that will report this week, so obviously eyes will be on earnings as the S&P 500 continues to just kind of perform right along with expectations. I think that's one of the reasons why the market's been effectively kind of flat. We've been in around this 5,800 range for the past 2 weeks, and assuming that everything goes well there, maybe we will continue. We'll also just note geopolitically, oil prices are down about 6% today. Over the weekend, Israel responded to Iran's original attack by taking out some air defense sites and some other things like that. It feels like tensions in that region, at least between Israel and Iran, sort of simmered down a little bit over the course of the weekend. And so you're seeing oil move a little bit lower, which is, well, good for the economy, good for consumer spending, and generally good for earnings. Last but not least, I would just note we will get a slew of economic data this week, including consumer confidence, as well as a jobs report on Friday. That jobs report is going to be really difficult to interpret just in terms of sheer number of jobs added. You've got a couple of different strikes that are going on or went on recently, as well as all of the storm-related chaos. Generally hard to hire people if you're dealing with hurricanes or if you're on strike. The unemployment number will be a little bit less messy to try and tease through. And I would just note that, the Fed's going to be very, very aware of the data that comes out this week. They meet next week to determine whether or not they're going to be cutting rates again. And I think if we get really strong economic data this week, that might push the Fed to be on hold for November. So we will just have to see how all of that plays out. As always, if you have any questions, please feel free to reach out to myself or to your advisor. I hope you're having a great day, and I look forward to talking to you again soon.